Good morning, traders. It's Friday, October 10th. Hopefully everybody had a great day yesterday, and hopefully fellow Canadians have a good Thanksgiving this weekend. Looking forward to tasty meals, family, fire. It is getting cold and chilly, and my furnace stopped working this morning, which I kind of noticed in the middle of the night when it was freezing. And anyway, the joys of being in a cold environment and all that stuff. Anyway, let's take a look at the markets. I'm going to start with precious metals because there's a lot going on and it kind of unwinds into what to expect in the equities markets, I think. So let's take a look at gold. Gold has had a reversal, short-term reversal at least yesterday. Now, if we take a look at the charts, there is our invisible support and resistance levels. I talk about this all the time. Nothing has changed. We have predicted this and expected this more so, this 4,100 or the 4,080 level. And using Fibonacci extension, we can get a grasp on these levels where we are right here. If we take a look at the markets, we saw gold run all the way up to our level. We ended up hitting our target 2 days ago, and literally as soon as we exited our gold position, we saw gold fall the next day. And now it's trying to figure out. So this is an invisible level. Obviously, we have the 618. If it pauses here with a hiccup, we usually hit the 100%. This was just a quick bonus trade that we did, a discretionary trade. Now we got to let it figure out what it wants to do. And potentially there could be another trade after that if it builds a launch pad to go higher. But I do have my doubts and will be interesting. Volume has slowly been ramping up. It's becoming the crowded play. Everybody's talking about it. There's no negativity around gold other than it's going higher and it's just beginning its trend. Well, if we take a look over at, let's take a look at PHYS or GLD. These are the same type of things. If we take a look, you can see we had a gap higher and a big sell-off on heavy volume. You can see that happened over here before it went into a big pause as well. Let's take a look over at silver. Silver had that big run up, hit all-time highs in pre-market, and then reversed the futures chart. If we take a look at the 10-minute chart, you can see how silver popped and hit all-time highs, and then suddenly huge money came in and just started hammering and selling into it. So whoever was going to buy it on a breakout to all-time highs piled in, and also whoever was in a short position saying if it breaks to all-time highs, I have to buy back my short and get out. And so that's exactly what triggered huge volume. And then the markets, the longs got in, the shorts got out, and then suddenly, boom, the market went the other way and really just took a lot of money from people and really screwed them over, as more so how the market works. But when we look at it, we have this. We went over this in our live mentoring session yesterday as this was all unfolding. We take the high, we take this low, we come back to this recoil. This was the first initial major move. And when we look at this, I can get a hold of it here. Take a look at that, we can see Fibonacci gives us these. We had the downward move, we had the bounce back up, we hit the 618, had a tiny little pause on the 10-minute chart, came right down to the 100% measured move. We watched this unfold in the mentoring session as it was selling off, and we drew these levels. And then, of course, I said that's probably going to be a fairly significant level for it to figure out what it wants to do next. If we use a Fibonacci retracement, so you go from the high down to the low, and we just go over how much can it retrace on that move. The general sweet spot is between the 38% retracement to the 50% retracement. Now it can go this whole block all the way up to the 618. So this is typically where it is going to want to, it's going to find resistance and potentially roll over and then start to go a whole lot lower again. And if you notice these gray bars, these are called volume by price. So instead of volume across the bottom showing you what volume was per bar for time, this one tells you how much volume traded at this particular level. So right where it's trading, silver's trading right now, are these highest bars of volume, saying it's in an area where it has the most volume traded. So it came down and now it's running up into high volume resistance, and it's trying to figure out what it's going to do. So usually it'll want to stall out. I wouldn't be surprised if it wants to push higher here and go beyond. I'll teach how to read this level later on another video, but the markets are just unfolding as expected. And take a look at the silver chart. When we go and we look at like SLV, this is how the majority of the masses trade and how they get screwed when they don't know what they're doing and they're doing pure FOMO. The market gapped sharply higher. Everybody who's serious into silver, who's not in, would have bought in yesterday, probably at the open, saying it is breaking out its all-time highs. And then they literally buy the high, and then it sells off and puts in what looks to be a reversal type of bar. Look at the volume, 111 million shares traded. So this is definitely a sign of major weakness. It is a shot across the bow that maybe the parabolic or the euphoric phase in this is coming to an end. And we've talked about this many times. You get these euphoric phases, these big pops just before it cracks to the downside. And if you look at this, you have a big pop and then it cracks, and then this is a phase, a stage 3 topping phase, and then you can see it go off a cliff. Well, let's just go take a look real quick. Let's go back to gold. Let's go to the weekly chart, and let's just zoom way back in time here. If we go back over here, well, we'll just go here. This is what happened during one of the last major peaks. Was we saw, well, we kind of had it back over here as well, but this one's the bigger one. We had the biggest euphoric phase. It cracked to the downside, it traded sideways, and then it went into a multi-year bear market and sold off, and it took years and years to come back. So when we look forward, we're potentially getting back into something like that. And of course, this goes against the grain because everybody's bullish, and we went over in detail about precious metals and the mindset and all of that stuff. But we have that kind of unfolding, and when we go and we look not only at the price type of action, but we go and we look at the market, the participants' emotions. This is, I'm a genius, I'm rich, I'm making a fortune, everything's working out, every mining stack I'm in is up, and all that is great. It's just, do you have an exit plan? So this is where the skill comes in, is when one of these waves comes to an end, do you keep your profits or do you give it all back and then ride out another really big, long potential bear market and not see gains for potentially months or years again? So that's the big question of where we're at. So let's get into some really messy charts here and see if you can keep up, because this is hard on the eyeballs. So this is the 2007 stock market peak. We had gold, which is the yellow line, hitting all-time highs, and it continued to push a little bit higher even after the stock market put in a top. We had the dollar eventually put in a massive bottom. It was out of favor. Everybody hated it. Well, here we are today, stock market at a high, gold at all-time highs, the dollar trying to carve out a bottom. And if we were to just kind of fast forward this, we would see that eventually the dollar shot higher, gold, silver, miners crashed, the stock market fell 55%. We were right at this critical turning point. So let's just go and take a look at what else happened at this time. So here we have GDX is the next chart down, gold miners. Now they became very volatile. They had 17 to 20% corrections along the way, while gold kept grinding higher. The gold miners were all over the place, and we might be entering into this volatility state. This is why I prefer gold. This is why we did our discretionary trade in gold, because it can just keep grinding its way up consistently and low volatility versus swinging for the fences with miners. I believe the majority of the miners play is over for now. And I actually almost feel like gold and everything is going to top at the same time because of how this market has rallied. And I'm going to touch on that after the precious metals part here. And we're going to go into some very weird price action going on, how the Mag 7s and yesterday's panic selling, which you wouldn't know, kicked in and is unique. So anyways, miners come to life usually just as the stock market and gold is starting to come to a major top. It's an early warning sign. That's when the masses pile in to try to maximize on growth. We see silver start to shoot higher. We see platinum. We see palladium. And then, of course, after all of that, that's when everything sells off and the markets come to an end. Usually when everybody piles in and everything is making money, after good times, usually comes bad times. And that's the reality of kind of where we're at. And of course, all these things can fall fairly substantially. You look at silver down 50-something%. Can't quite see them on the way this chart is. 67%. We see platinum, palladium fell 71%. Gold miners, they fell 71%. So again, you're looking at like 300, 400% returns needed in some of these cases to recover back if this was to take place. Well, let's just fast forward to where we are now. We have miners have come to life. Platinum has come to life. Silver's come to life. Palladium has come to life. This is like the crowded play right now. And it's funny because, you wait. And when we go back to gold, and I'll just pull up this chart because it's a little easier to view. But when you come back here, we look over here and, you wait. Let's go all the way back. We wait about 13 years, 14 years for gold to really start breaking out and starting to run. And same with the miners. You just wait so long, and then suddenly out of nowhere you get this, a couple months of huge rallies and things just scream higher. And then you feel like it's just getting started because you waited a decade for this move to happen. But the reality is it happens very quickly, and you think it's just getting started, which it did just start really in the grand scheme of things. But it's also just about to end from the looks of it. And that's not what people want to hear, but that's the reality of it. And whether it does, you got to let this continue to work itself out. We have early warning signs that a top is very close, if not in. So now it's time to turn on your alert systems to say, how do I know when to get out? What do I do? And all of that stuff. So let's take a look over at the equities market, which is showing some interesting price action. We'll just go to the SP 500. And what is interesting here is the stock market ended up, so we have our little panic selling indicator. When we see some panic selling, usually the market's putting in a low. When we have a level of FOMO, like over here, that's usually when the market's putting in a short-term high. Now, this is a 30-minute chart. Price just ping-pongs around between everybody chasing pricing to everybody running for the fences, running for the door. And it just goes back and forth. What's interesting is the panic selling kept ramping up, and it actually closed at 4. Even though the market was selling off through the day, but even into the closing bell, the price of the market rallied and moved up, even while panic selling was picking up, which is weird because you'd think, well, how do you get panic? Usually when there's panic selling, prices going down. And when panic selling is going up, it means there's more and more shares being dumped on the bid, and people just exiting. Market orders, just get me out. And usually that drives the price down. But we have orders, more sell orders coming in, yet prices going up. And that is camouflage. That is when we go and we look at the Magnificent Seven. This shows how weak this market is. The Magnificent Seven had a very strong run into the closing bell the last couple of hours. This is a 30-minute chart, so we're looking at 2.5 hours. The Magnificent Seven was dragging the indices higher, but the majority of stocks were actually getting dumped and sold off. That is a divergence. That is a scary sign. And of course, our sentiment chart, which tells us what the big money is doing. This is the last time we saw the stock market running higher with orange and red bars. And the orange and red bars are telling us that big money flows are exiting the market, even though the market is pushing up to all-time highs. And then, of course, we got into a huge sell-off event. That was the tariffs this year. Well, we have the same type of thing. Stock market's going high, but the big money is actually getting the hell out of Dodge. And so it's just a matter of time, I think, before we see some big crack and some type of news. Something is about to happen. The charts tell us this. The big insider, the big money flows are also warning us that, hey, they're just waiting for the hammer to drop or the music to stop or whatever you want to call it. So that is what we need to be aware of. Until then, the trend is up. The Mag 7s are primed and ready here. This is a tight little bull flag. Every time we've seen a tight bull flag, we see the market rally. It gets into a tight little bull flag, and then boom, it continues and grinds. It goes into a bull flag. It pops. So this is the big question. Do we have potentially one more big push? Is this going to have another pop and drag the markets dramatically higher and get even more people bullish? Because everyone seems to be bullish across the board. Money is piling into small caps, micro caps. Mag 7s haven't been budging while the rest of the market's been moving up, which is a little bit of a warning sign. But if we do get one more push, man, I do feel like we're at that tipping point. The psychology, the how traders and investors are thinking and feeling and what they're doing with their money right now is like pure signature move. One more big push up here in the Mag 7s and a pop I think is going to put the rest of the people who are not in the market into that stress zone where they're just like, I have to get in. This could be like the last push. And this is when most investors who have been holding out because they know something big and bad is coming, they actually get in, and then the market rolls over, and then of course they kick themselves for the next 5 or 10 years going, how the heck did I perfectly time the top and buy it, and then it drops forever and I lose half my money. So that's kind of where I think we're at. Now, this is the same scenario. I haven't been talking about this for a long time, but as we inch closer, these finer details, now we're getting into the intraday charts showing this stuff, that we are very close to a major market top, and the precious metal space is also very brittle. Another thing we should look at here is the dollar, because the dollar plays a big role. When the world starts to fall apart, the dollar tends to rally and rise from the ashes. It has been very hated. It's been trying to come out of a downtrend. It's showing some signs of life. This is the weekly chart. But if we even look at the daily chart, you can see here we have the Fibonacci levels being tagged here. We've got a rally up, and we got the pullback. And you can see we've hit the 618. It's heading up here. It's starting to slowly carve out a bottom. When we look at the price action, it's slowly trying to carve out a bottom and move higher. And when we look at the Canadian US dollar and Canadian dollar, it's already more or less put in the rounding bottom and starting to move higher. So if you're a Canadian, holding US dollars seems to be the play at this point, because it looks like we're eventually, this might pull back and work itself around a bit, but overall this is pointing to much higher pricing. And the very long-term chart is showing us, just as gold has been screaming higher, telling us something bad is coming, and the amount of rally we've been seeing in gold, silver, and miners, that analysis carried over here shows us at a dollar. Most people won't believe it, but it actually shows us at $1.74 exchange, or $1.72. So there's huge potential for obviously Canadian economy will just get annihilated. The dollar, the loonie, and the US dollar could rise. So it is showing some pretty wild price action. Of course, if that happens, it could hurt gold. Although gold may hold its ground, because we are in that perfect storm for gold to hold its value with all this stuff going on. But there's no doubt a big rally in the dollar is going to hurt gold dramatically. Let's take a quick look over at miners. A couple interesting things. We have seen a couple big bouts of selling over the past week and a half. We had a big sell-off day here, and it bounced back. And this is what I talked about in the mentoring session yesterday. The first bout of selling or two that comes in silver and all of these things usually get bought back up. The buy the dippers who think it's just getting started, the markets get hammered. Look at the volume. Some big people are unloading shares up here into the hands of the average investor who don't realize this is probably a short term or it could be even a significant top. And so people just buy it back in. Yesterday we saw it got hit, and the selling the buyers weren't able to get it back. Now it is oversold. When we look at our oversold chart here, it's dipped into this oversold territory. And of course, it could have a little bit of a bounce back up. But again, we're seeing some pretty big selling and price action in this space. If we take a look at SILJ, again, gap to the upside, a bearish engulfing candle. It opened higher than the previous bar. It sold all the way down, closed below it. Huge volume. This is a sign that selling is starting to take control. If we take a look at oil real quick, we've talked about this move to the downside, this little bearish flag, how it should resolve down to about $56, $55 a barrel. If we zoom back on the chart, that would bring us down into this level down here and here. So we could see oil continue to unwind and move lower. Falling oil pricing, is good for miners because it lowers the cost, but overall I don't think oil is really factoring in anymore into the precious metal space too much. I think there's bigger things at play now, bigger money flows and sentiment and emotions versus every tick that oil is doing having effect on it. But it looks like oil wants to head down, and that is a sign of weakness coming in the economy. Last but not least, we've talked about XLU being a bit of an indicator that we need to keep an eye on. It's not great for timing, but it's good for warning us that there's problems, short-term problems. Yet the top chart here is XLU, which is the utility space. It's seen as a defensive, protective place. No matter what happens in the world, we're going to still need electricity, running water. So these pay dividends, and that's where people go to these boring companies when they start to get nervous. We have seen it rally 9.6%. At the same time, SPY has rallied 3.4%. So there's a pretty big spread there between who's outperforming. And so when money starts to outperform consistently over a month or two in the utility space, that's usually a sign that the stock market itself is starting to run out of steam. Now, all of this could be trumped in terms of the major indices if the Mag 7 breaks out and pops here. The Mag 7 for the last 2.5 weeks, 3 weeks here has really just been trading sideways. If it gets traction, it's just going to be one of those things where, it's going to drag the markets higher, and it's going to have another leg up, which is perfectly fine. But everything is telling us if this breaks to the downside, it's going to unwind in a big way. If you didn't watch yesterday morning's video, I talk about how it's going to annihilate the markets. It's going to pull the stock markets down in a massive way. But until this runs out of steam, we need to be aware of that. I guess one last thing to touch on, actually there's two, touch on Bitcoin as well, but we're seeing bonds start to move up. The question, it obviously looks like it is in an uptrend, a short-term uptrend here. Long-term wise, it's still stuck in a massive basing or a downtrend, but it's getting a bid. People are getting nervous. We might see bonds want to come back up, touch the upper end of this channel again, which we talked about yesterday or the day before. The other thing to touch on real quick is Bitcoin. It's doing what we wanted to see. I mentioned the other day this very strong move. I'd be more inclined or interested in this if it has a controlled pullback, a bull flag pattern. It's exactly what it's doing. So this is a very good sign. What you don't want is a strong move up like this and then a reversal bar, because that usually leads to further bleeding of price. And this here was kind of the same. You get a big rally up, it runs all the way up, and then it gets slammed back down, and then the next day it sells off. That is a sign of weakness, and usually the market is unstable and untrustworthy. Again, that type of price action happened here. This time around, though, it is building a bull flag, and it is pointing to that higher price of 136. So this is really nice to see. If the Mag 7s pop and take off, that means the NASDAQ's going up. That means we probably will see Bitcoin go up as well. They are generally pretty closely linked. So if you are in Bitcoin or looking for it, if it does start to turn up and start to break to the upside, you might be able to squeeze out a small play. But for Bitcoin, again, it's not the biggest move anymore. If we look at just where it is to 136, it's 11% move, and which isn't very big for Bitcoin. The amount of volatility, it can do that in a day to the downside. So I'm not a huge fan of walking through a landmine, and if something big and bad does happen, it's probably just going to tank, and it's not a very good risk-reward ratio. But anyways, that's it for now. Sorry for the long video, but talk to you soon. Bye-bye.